All right. Hello and welcome to our cdETI launch event. I'm Cruz from Index Coop, and we've got with us Todd Groth, Head of Research at CoinDesk Indices. Hello, Todd. How's it going?
Hey, Chris, good to see you.
Yeah, you as well. Of course, we are here today to talk about tokenizing ETH momentum strategy. Just released the Index Coop CoinDesk ETH Trend Index, an automated strategy that implements CoinDesk Indices Ether Trend Index on chain for the very first time. Todd, you're head of research at CoinDesk Indices. Can you just briefly intro what is CoinDesk Indices? What do you guys do over there?
Sure. So we are the a index provider that's part of CoinDesk, and what we're really trying to do is we're basically a lot of us have traditional finance backgrounds. We also have some that are pure crypto native experience. And what we're trying to do is we're trying to build a bridge basically between the traditional market investors and the crypto market by providing index solutions, which will in some ways produce consistent pricing across exchanges for simple tokens such as Bitcoin, Ethereum, other tokens as well, through to we have a sector DAX framework, which we look at tokens. We have a taxonomy from which we tag them. We have sectors. And we also have systematic strategies. We also launched Ether staking rate. So a bit of active strategies, building sectors, building simple price sources. Our price source XBX is behind Grayscale's GBTC trust. So a few different flavors of indexation, which is very much a traditional finance approach to products, which we felt that the crypto markets desperately needed as we go through to institutional adoption.
Yeah, of course. At Index Coop, we build on-chain structured products that simplify the best of DeFi. A different meaning for index out here in crypto. With all of our products are ERC20 tokens that are redeemable for their underlying assets, and we're really excited to partner with you guys to bring this product to market. Let's go ahead and get into it. Starting off, of course, with a disclaimer. For informational purposes only, should not be construed as legal, tax, investment advice, or any other sort of advice. You can read the disclaimer. Briefly, we'll go through what we're covering today. So, of course, we've just already mentioned cdETI is an Ether trend index, but we'll go through what is a trend strategy, what is the CoinDesk trend indicator. Todd's got a fair bit of experience building trend indicators across traditional finance, and of course, is the brain behind the Ether Trend Index that powers cdETI. We'll talk about who cdETI is meant for, and we'll deep dive into all of the components of that CoinDesk Indices Ether Trend Indicator that you guys have been publishing for a while, and we've just now brought on chain. We'll talk about how to buy cdETI, and we do have time for questions at the end. We've got a fair amount of questions that have already been submitted in. But if you're here in the chat, feel free to fire your questions in, and we will get to them at the end. Good ones. Important links you can find here. We'll be firing them off in the chat. The most important thing you need to know is indexgroup.com/cdETI is where you can learn more about the product and where you're going to be able to buy it. Let's get into it. So, Todd, I want to begin with just what is a trend indicator? What is a trend strategy? And you can go through kind of some of your experience in the past. But for people that don't know, if they aren't familiar with a trend strategy in general, and here they're hearing about a trend index for the first time, what is a trend strategy?
Sure. So I think at a high level, there's sort of three different ways in broad investment strategies from which to approach the markets. There is value investing. Which when you hear value investing, you think Warren Buffett, you think buying something cheap that produces a lot of value and cash flows. Then there's carry or income investing, where you're basically looking at yield. You're like, okay, I've got a bond here that's 2%. Here's 1.5%. I'm going to buy the one higher yield, or I'm going to collect some dividends. And then the third category is momentum or trend investing. And what we're doing here is we're looking for prices that are accelerating or increasing, and we're buying high prices, hoping to receive higher prices in the future. Value is more buy low, sell high. Trend strategies, momentum strategies, are more buy high, sell higher. And so broadly speaking, each asset class has a different investment style, strategies. Each asset has a different approach about how the market evaluates it. Broadly speaking, in digital assets, what we find is because digital assets are driven a lot by network effects and sentiment, momentum is a very strong and persistent force in these markets. And so what we're doing when we're creating a momentum indicator is we're using tried and true methods that a lot of macro investors have used for decades. Paul Tudor Jones, your swing traders, the turtle traders. We're using similar techniques, in this case, moving average crossovers, to determine the momentum strength in the market, and then and with that provide a signal that you can see on. So you have our webpage up of CoinDeskMarkets.com. We publish the Bitcoin trend indicator and Ethereum trend indicator on our website, and we're producing this indicator so that product creators such as yourselves can produce products based on these momentum indicators.
Yeah, absolutely. So, I mean, what are we looking at on this chart here? You know, you mentioned kind of moving averages, crossing over, and trying to identify trends.
Sure. So this indicator and this chart specifically, what we're looking at here is the line is the price of our Ether token price index, which is, again, we were mentioning earlier about what we call it cdETI, CoinDesk Indices. What cdETI does, one of our suites of products is coming up with simple price indices for Bitcoin, for Ethereum, for other tokens, and this is the Ethereum price index. What this is a composite price across multiple exchanges, notably Coinbase, LMAX, Crypto.com, a lot of different sources. We pool together the current price of Ether on this chart back through time. And so this line is that Ether price over time. Now the colors, the greens, the reds, the yellows, what this is the signal, the trend indicator signal overlaid on that price graph. So ideally what we'd want to see in a strategy that would try to forecast or predict future price moves, we would want to see, you can think of this as a mountain. We want to see everything on the left side of the mountain to be shaded green, as that's a slope upwards in the price. And we want to see everything on the right-hand side be shaded red, as it was forecasted to have a downward trending market, a downward price forecast in the future. Below the price level chart, you can also, that's another way of showing this signal that oscillates between significant downtrend, which is the dark red, and significant uptrend, which is the dark green. So you can see here that generally this indicator historically has shown to allocate to show significant upward trends. During 2021, for instance, it was almost always almost complete. On average, it was significant uptrend over the full year. You know, it seems a while ago, 2021. And then in 2022, you see a lot of red. You see a lot of dark red too. That was the beginning of the crypto winter, the bear market in crypto. And then 2023, onto that, we've seen that beginning the first Q1, we had a lot of dark green. This was, again, a lot of people had moved out of crypto, had called the crypto winter, come back in a few years or a few months to invest again. And we had a stealth rally from the lows. And the great thing about systematic strategies and algorithmically oriented driven signals, is that it's always checking the price, it's always checking the market conditions, the momentum on your behalf, so that you can focus on other things than to determine, are we in crypto winter? Are we out of crypto winter? This signal fortunately caught the rebound and in Q1, Q2, and now currently this is as of, I don't know when the screenshot was. We're currently neutral on the trend indicator. I think as of yesterday, so this might have been a screenshot from a few days prior. But we've seen more momentum right now in Bitcoin prices than Ether, but we'd expect Ether to attach back to Bitcoin with the rally.
Yeah, if you're watching this stream right now, you're probably aware that momentum has been picking up. Bitcoin has been leading the rally for sure, but yeah, we just saw the trend indicator flip from downtrend into neutral for ETH. I think yesterday and today. But yeah, I mean, I really like what you said about, the trend indicator is about buying high and then riding it higher, right? Riding it up the mountain. And I really want to get into kind of your background with building these trend indicators. What are some other financial assets you've built, trend indicators before in TradFi, and like how do they compare to crypto? Does the trend indicator strategy fit a lot better with volatile, or people call ETH an exponential asset a lot?
Mm-hmm.
Well, what other assets you build trend indicators on?
Yeah, sure. So first on background. So I've built trend indicators in all markets really, from equity index, equity and volatility indices, commodities, developed and emerging market currencies, bonds. I think that's all. Oh, and credit default swap indices. So I've kind of gone across the gamut here, and when comparing those to crypto. It seems to be even more of a momentum asset, especially with respect to Bitcoin and Ether or Ethereum. And part of that is because of the network effects. It is because of the exponential asset, as you mentioned. Whereas other markets are, it really depends on the market. What's interesting is, one of the worst trending markets is equity index markets, so like the S&P 500, for instance. And that part of that is because you also have value investors, you've got dividends, you've got cash flows, you have a lot more participation as well. Where in crypto, we're still hoping for a broader wave of institutionalization, which will with it get its own momentum in the market. So we're kind of, I don't want to say we're early days in crypto, but we're definitely not completely late stage as, say, the U.S. developed equity market is. And so you can think of it that with a trend indicator, especially if you're just looking at price, we're not really prescribing what is moving the market at any particular time. There's a lot of underlying latent sort of zeitgeist trends that are occurring. Some of them, the slow and constant drip of spot Bitcoin filings, for instance, has been one this year. Solvency risk 2022, as more and more exchanges were put into question, protocols were being liquidated, the market continued to trend downwards, triggering more liquidations. People considering about collateralization of existing loans. That drip too is to the downside. But anytime you have more and more drip of information and consistent trend in those underlying narratives, that begets momentum in the asset. And so by just looking at price, we don't know what's trending the market, but generally news, people's beliefs, those update over time. And with that, we simply filter the price, take out some of the noise of the price too. I mean, crypto historically has been a very volatile asset class, and it's easy to get whipped around. And so I think that's also another reason why doing a simple smoothing of the prices, judging recent prices, not today's price, but recent prices relative to longer dated prices, and just that sort of takes out some of the noise and the whip nature of crypto, and then creates a much more consistent, less volatile signal from which to then direct your investment in the space.
Yeah, absolutely. So Todd, what inspired the creation of these trend indicators? Was it kind of just one of the first things you're excited to do when you joined CoinDesk Indices?
Yep. Yep. Yeah. Yep. I had looked at similar ones in 2021 when I myself was getting into crypto, 2020 and 2021, and it seemed like a perfect momentum asset from which to develop indicators on. Um, I'm a very much you know I'm a engineer by training, and whenever I think about investing or my own beliefs, I need to start with data and just see what the data tells me in terms of the way to approach the asset. And when I was getting into crypto, it was twofold. One was looking at indicators and strategies from which to, if I was going to be active, I wanted to make sure that I at least had some data to back up the trading strategies I was considering. So when I got in and became head of research at CoinDesk Indices, it seemed like a very easy, no brainer kind of signal approach to start with as the market develops.
Yeah, it's a high signal thing that you've created here. And yeah, you mentioned you guys can check out the current value of the trend indicator and deep dive into the methodology more, which we'll do on this call in a minute. But coindesk.com/ETI to check out the current value of the indicator. You can refresh and watch the neutral indicator and come back tomorrow. Hopefully we'll start to but yeah, let's into breaking down kind of how the indicator works a little bit more. So deep dive. What is the CoinDesk Indices Ether trend indicator? We've talked about what it is, but I want to get into like what are the underlying components of the index? What are the pieces? Maybe break down kind of this legend and the process of how a trend value is calculated.
Yeah, that sounds good. And we do have the indicator. I see in the comment section, it was posted the methodology. So as an index provider, we whatever we do, whether it's a single asset index, a multi-token index, or a systematic active strategy, or staking yield calculation, we publish all our methodologies online. So that you understand what we're doing. There's nothing black box about what we do. We need to be transparent and open about our methodologies to gain so that we can be an index provider. We're not in the game of producing alpha. That's for active investors. You can consider some of our. You can use our indices for benchmarking of those active portfolios. But we publish everything on our website. So what the basis of both the Ether trend indicator and also the Bitcoin trend indicator, it is a composite momentum signal that has four underlying signals. Those are simple moving average price crossovers. Unpack that. So if I want to estimate a trend, there's a lot of different ways to determine the current trend in the market. But at some level, because I want to buy high, I want to look for prices that are increasing or decreasing in the sense of looking for a negative trend. I need to have a estimate of current price, and I need to anchor it to price back further in history and look at the difference between the two. So if I look at near-term price, say because crypto is fairly volatile, maybe I don't want to take today's price. Maybe I want to take maybe the last 2-day price or the last 5-day price. And I'll take those recent prices, which 5 days in crypto a lot can happen in 5 days. But there could also be a lot of noise and a lot of FUD and a lot of just uncertainty over the last 5 days that might not be relevant over the price direction. So I want to estimate where are we currently, and then compare that current price with a price much longer ago. So what we do here is we pair 4 different look back comparisons together. In essence, I'll just take one of them, for instance. We look at the 5-day average price and compare that to the average price over 20 days ago. So 20-day price is going to be 5% on every price for the last 20 days, and compare that with the five most recent prices of the index. If the 5 days, the average of the last 5 days is greater than the average of the last 20 days, then I can determine that there's an upward trend. Similarly, if the last 5-day average price is lower than the last 20-day average price, I can assume a negative trend. And so if you look at this chart you have with the trend values for look-back windows, they're basically binary. They're one, well, not binaries. Binaries would be 1 and 0. This is 1 and -1. But they're indicator signals of 1 or -1. And that's for 4 different look-backs. We use 2-day and 10-day comparison, the 5-day and 20-day average price comparison, the 10-day and the 40-day average price comparison, and the 20-day and 80-day. So that's the basis of those 4 ones or -1s, and then we average them together. Very simple. So just on average, if they're all positive, then the Ether trend indicator composite score, the average of all 4 different lookbacks, will be 1. If 2 are up, 2 are down, we take the average of that. There's no consensus of if we're in an uptrend or downtrend. If we are in a significant downtrend, all 4 of them will be pointing negative and will be negative in the ETI indicator.
Got it. So yeah, I got the different look back periods. I think you said 5-day, 10-day, 20-day, and 40-day, something to that effect. So those are the different look back windows as far as, okay, we're comparing the price of ETH today versus last week versus last month, et cetera, et cetera. And then from those comparisons, we get a trend value where it's either a significant uptrend, an uptrend, neutral, downtrend, or significant downtrend based on, is the current price higher than how many of those look back periods. Got it. So how frequently does the trend indicator update, right? How often are we going to look back at all those periods?
So the actual indicator is a daily indicator. So every single day we will be recalculating these 4 different lookbacks, averaging them together, and then publishing it on CoinDeskMarkets.com. But historically, the trend indicator it'll change signals every about, say, 5 to 10 days in the market. I was going to say business days, but the unique thing about crypto is we're 24/7, 365. So every 5 to 10 days, we should expect a change. Now, if the market is in a very strong uptrend or a very strong downtrend, it could be that recent prices are so far away from their historical prices that we should have a persistent trend over weeks, over months even. So it matters more about recent market conditions, and how much trending, how much underlying narrative is being persistent, is being strengthened either positively or negatively. That ultimately determines how often these signals flip. I will say in 2023, we have, first quarter of the year was a very strong bounce in prices, and then with the collapse of SVB Bank, with concerns over maybe the tightening cycle would be shorter than others had suggested. That did result in positive trend for that quarter, but then at Q2 and especially Q3, there's a BlackRock filing, but then it was sort of like, especially that summer, a whole lot of nothing. So with that, when you do have those range bound, or as my colleague Andy would say, listless markets, you could have some flips every few days just because it's just chop, and that's probably the worst market environment for these indicators, is when we're just range bound, when there hasn't been enough substantial news or change in sentiment or change in positioning to warrant significant underlying trend dynamics in the market.
Mhm. Yeah, crab markets can be difficult for this indicator, right? Your
Yeah,
momentum strategy is not going to perform as well when we're just
yeah,
jumping.
yeah. They're almost kind of like frustrating and range bound, but it's sort of like it's like a whole lot of nothing. And so these any momentum strategy. So generally, when you're thinking about building a broader trading system, momentum strategies are definitely a core of those systems. But then you might also want to think about how to pair this with, say, a strategy that would just buy more mean reversion, or reversion to the mean, more like a value strategy, which pairs well with signals that are momentum driven, like such as ETI.
Yeah, it's really exciting to apply this momentum strategy to a volatile asset like ETH. But let's talk about some of the risks in building a trend indicator or a momentum strategy. Let's have a conversation about overfitting. I think that's one of the clear risks in building a model like this. So first, can you just kind of define what is overfitting for the audience? Then we can
Yeah,
talk about its role in a strategy like this.
sure. Yeah. So overfitting. So when we're developing a strategy, first off, we generally rely on historical data. Um, we can have some sense of intuition of what we think things should be, but at some level, a lot of the basis for strategy development requires historical data. Now, what's tricky about cryptos, there is as much historical data. We can't go back 100 years as we can in equities, or hundreds of years in bonds. Um, or commodities. I think we can go back a few decades, go much longer if you just look at gold. So there isn't as much historical data in crypto um, from which to build strategies on. And even then, Bitcoin 10 years ago, there's some data that we have, it goes back to 2014, 13. Is that market in 2013 and 2009, is that similar to the market we have now? Probably not. The initial market was much different structure. There was a much different ecosystem around Bitcoin and around Ethereum than there is now. So if we do develop a strategy based on that earlier data, is that relevant to the price dynamics more recently? So there's a lot of hypothetical and theoretical concepts here which are hard to test. So at some level, we need to define at what period of data we have some reasonable intuition and agreement that markets haven't changed so much since then as current ones. How far back can we go that gives us a representative market of the current structure? Once we have that, then we can run different parameters. If we're developing a momentum strategy versus a value strategy, assuming we're doing momentum, we can then start to run some parameter tests. Some quants will do like a grid search, for instance, where they'll have every possible combination of different parameters to find the optimal one historically. And that's great, but what the issue you can get into is if you choose the optimal choice for every different parameter and bell and whistle on your indicator back through time, that would work historically, and with the benefit of foresight. I mean, I wish I could I wish I experienced at least even a third of what the back tested hypothetical strategies I've developed over the years have produced. That'd be amazing. But we need to consider and have some humility about when we choose parameters of is there intuition or a understanding of why this exact combination of parameters should exist and should persist to be superior over other choices, or should we, or is that a backfitting strategy? Basically, backfitting. It's funny in finance. Backfitting is another term would be p hacking in data science. In finance, that's sort of a bad term. In broader data science, that's a good term. Data mining is another one. And in other fields, coming up with the right parameters that might be more robust. But in financial markets, you have to think that there's a lot of other quants doing the exact same thing, And if there was some sort of magnitude combination, that would then change the market conditions going forward to mean that that particular strategy will no longer work. So we do need to test and make sure that whatever parameters we use, they're reasonable, but not to optimize every single parameter, or else we do run the risk of overfitting. In the case of BTI and ETI, what we did is I used Bitcoin price index over time because there was more data available than Ethereum. Didn't really look anything prior to 2016, with the idea being that market conditions have changed enough prior to disregard. And I didn't even look at Ethereum price history. That was used as a full out of sample test. So the indicator is exactly the same methodology applied to both assets. That same forward look backs applied, and so that was sort of the out of sample test. I guess in summary, overfitting is kind of equivalent of explaining history, but in a mathematical formula, as opposed to what exactly happened. But history will never repeat itself. It can rhyme, but we should have no reason to assume that history will completely repeat itself, especially from a mathematical formula perspective.
Yeah, I just want to restate. So you mentioned the out of sample test here was using the formula for the Ether trend indicator on Bitcoin price data to predict.
No, sorry, flipped. So the parameters were tested on Bitcoin. Looked at these different lookbacks in isolation, so that 2-day, 10-day, 5-day, 20-day, etc. Looked at those in isolation, chose amongst a broader set those four, and then tested Bitcoin. Obviously, if you choose ones that are good, the average of good will be good or great through diversification, and then those parameters were then used on Ethereum in out of sample, or it's not out. Because Ethereum and Bitcoin are correlated, it's not a full out of sample, but it is another sort of cross validation check.
I was going to ask, do you think that the reason that test kind of passed was because of how correlated ETH and Bitcoin are, that they move on the same, on the same signals at the same time, I guess?
Yeah, so it does. They're not perfectly correlated. And for instance, you can see recent price action. Bitcoin is definitely leading Ethereum. But yes, broadly speaking, they share a similar trend due to correlation over lower frequencies. So yes, some of it is because of that, but that's only part of it. As actually, what's interesting is the Bitcoin, the Ethereum cross rate, BTC ETH cross, that's also trending as well. So it is interesting that they are correlated. So yes, your intuition is correct. They should, if one does well, the other should do well, just because of the correlation effect. But it's not the complete story. There does seem to be times where Ether does exhibit trends when Bitcoin does not.
Yeah. Okay. We're going to move on, but if you guys want to dive deeper into the methodology, again, coindeskmarkets.com/ETI. In the bottom right, there's 3 different PDFs you can download that really go through the methodology in great detail. So next up, let's talk about how cdETI works. Now, reminder, cdETI is the new ETH Trend Index token that we've launched today. It trades ETH and USDC back and forth according to the signals provided by that Ether trend indicator that we've been talking about. So TLDR here, how cdETI works. The value it delivers to the user, we're going to capitalize on ETH's momentum by providing an automated way to benefit from ETH's price momentum by capturing gains during bullish trends. We're going to have you in ETH during the bullish trend, so we're going up the mountain, and it's going to rebalance out to USDC when the trend reverses. So those few different trend values we talked about on the last one: significant uptrend, slight uptrend, neutral downtrend, significant downtrend. There's a corresponding ETH and USDC allocation that cdETI will be in according to the trend. So if we're experiencing a significant uptrend, we're going to be allocated all the way to ETH, specifically wrapped ETH. Kind of an important note here: this strategy only toggles between the two most liquid assets on chain, which are ETH and USDC. And as the trend starts to stall, if we go from a significant uptrend down to an uptrend, we're going to rebalance some of that ETH to USDC to kind of start hedging our bets a little bit here, if we're not in a clear uptrend. And then as the trend starts to stall, if you get into a downtrend or a significant downtrend, we can be in 100% USDC to avoid those market crashes that we experience here in crypto. So cdETI takes the guesswork out of your allocations. You're going to automate your ETH exposure based upon Todd's Ether Trend Index that's been published, and we pull the data from CoinDesk Indices API. Again, once a day, a new trend value is published, and this automated strategy will always be checking that trend index and allocating accordingly. So Todd, what's exciting about kind of seeing your Ether Trend Index implemented on chain? You guys have productized, the Ether Trend Index a little bit off chain. You had some announcements come out last week, but this is the first time you've seen cdETI as an on-chain strategy.
Yeah. Well, I guess first off, I want to say that the whole team at cdETI, a lot of work has gone into this across not only research, but index governance, operations, engineering as well, to bring this live and via API. So shout out to the whole team for helping to make this a reality. It's really excited to launch, especially on chain. I mean, it's one thing to have something that will trade, Monday through Friday in normal market conditions, but to actually launch on chain with you guys is it's been wonderful. Really looking forward to this launch. Sorry, what was your question exactly? I was too focused on that.
Too excited to give the team credit. Question is, what are the benefits of seeing this on chain? Why are you excited to productize this on chain? I guess the main one you mentioned is one, it's exciting to see the technology in action, but it's 24/7, 365 now, not trading just Monday through Friday.
Exactly. No, it's great to have the opportunity to really utilize this technology on chain strategies. So getting our hands dirty with you guys on chain, that's phenomenal. It does help to be able to be trading 24/7, 365. Some weekends. What's interesting about think about weekends, rebalancing weekends. A lot of corporate news flow happens during the weekday. Weekends are more like geopolitical event risk of something blows up or something happens across the globe, and it kind of jitters everyone that's been on taking a break on the weekend. Well, except maybe crypto investors, because 365 markets. But so it does help at the margin to be able to trade over weekends, and just to have that constantly vigilant, always sort of watching, to take full advantage of that systematic algorithmic process, and not have a market close is great from an implementation perspective. And just being able to have this wrapped up in a token too is phenomenal. Love it.
Yeah. What are the primary benefits for people using cdETI here? I'll kind of start it off. Taking emotion out of trading seems like one of the biggest ones. What do you think are like the common mistakes that people avoid by automating their exposure here via cdETI, rather than trying to kind of manually trade, or even like manually looking at your trend indicator and trying to ride the momentum themselves? Because I feel like most people in crypto are not the most profitable traders. Certainly there are some experts out there, but I think like most people do not do a good job.
Yeah, it's interesting because on one hand, if you've held a bag across multiple cycles, you probably have your own intuition about what works and what doesn't work. When we think about strategies and sort of just quantitative research, a lot of my background in hedge funds, and actually is at a fund of hedge funds. And we always ask the question of, whenever there'd be a profitable hedge fund manager sitting across the table, they're like, is this survivorship bias? Like, would I still be talking to this person if they had lost 50% or even 25% last year, and they didn't make a bunch of money during the global financial crisis? Like, the path really matters in any investment strategy, of whether or not you'll consider it based on if there had been a poor performance historically. And for those that have survived multiple crypto bull cycles and crypto winters, there could be intuition there. There could also be a little bit of hubris and a little bit of luck involved. And so I think that when someone applies their knowledge of the market, and if the market's changed as well, they might have a bias to perhaps maybe double down when prices are dropping. And that can be the proper approach for a good outcome, if you believe there's some sort of catalyst that will cause a rebound. But it could also be a good time to take chips off the table, and momentum strategies across asset classes, not just crypto, but across asset classes, are generally known to be positively skewed. What do I mean by that? Is that when you are in an uptrend, you will generally have your returns will, obviously this is not investment advice, but generally momentum strategies reshape the distribution of returns so that you'll experience more outsized gains than outsized losses. And there's a few academic papers on that. A bit of it is catching people off guard with the result of surprise, of liquidation events, people not following the market and then all of a sudden realizing the market's dropping, and then they liquidate all their holdings. Momentum strategies are used by institutional portfolios to hedge in down markets, especially. And so with that, we find that a momentum strategy, a trend following strategy, such as implemented here, we are trying to as much avoid bad markets as participate in good markets. So there's a little bit of a risk management function here to try to reshape the distribution, to opt out if the markets are trending downwards, not be a hero, not try to buy the dip, because empirically buying the dip can work, but more often than not, you're catching a falling knife, and we're trying to avoid that. And what we also find is that in the on-chain and in the DAO space, there can be some disagreement about who should trade the DAO treasury. Should it be in just stablecoin? Should it just be in ETH? Should it be a mix? The nice thing about an implementation such as the one here is that this is all rules based. We have a methodology. It's published, so people can either agree or disagree on it. But there's no judgment. There's no discretion. There's no single trader that wakes up today and feels bullish or bearish, irrespective of what everyone else sees in the market. And so with that, there's some power to all agreeing to a certain set of rules, investment rules, prior to the launch of the strategy. I think is quite powerful, because you go in to the idea, you go in with a game plan, and you don't change the game plan when, that famous Tyson quote, when you get punched in the face. You just go with it, you execute, you stick with the plan, and you ride it out. And I think there's something really powerful about that.
Yeah, I mean, I think I see this a lot in talking to DAO treasuries. The conversations mirrors what you're talking about, where it's like when ETH's in a significant uptrend, it's like, of course the treasury should be all in ETH. Like, it becomes common knowledge. Like, I mean, of course we should be riding the benchmark.
Yeah.
And then when we're in a bear market, well, I mean, we can't afford to be, letting our treasury bleed in ETH. Of course, we should be in USDC.
I had misgivings from day one about full ETH exposure in a bear market. Yeah, no, there's a lot of hindsight, and that's the challenge. And I think the beauty of investing is it's trying to get past those hindsights of that little bit of that you have to think of, okay, that's all great in the past, but what do we think about the future? Where do we think this is going? And you make the best decision with the information you have at the time. Unfortunately, none of us can benefit from what we know now in hindsight. And to that end, to come up with a set of rules, which, for better or for worse, it's going to miss some market up. It's going to miss some prints that are going to be positive. But we're hoping that you're also going to miss some pretty bad prints to the downside.
And staying alive is the name of the game, right?
Exactly.
Bottom line for cdETI, we're gonna capture gains during bullish trends. We're gonna be in ETH. We may underperform slightly over the short to medium term. You really need to hold this for kind of a full cycle, ideally, but at least a year holding period for this strategy to really make sense. You got to commit to it. But we're going to preserve your capital during the bearish trends, right? We're going to be in USDC. We're not going to ride those huge drops and just, I believe in ETH. I believe in the network. I want to hold it, but we got to be rules based, right? If there's a significant downtrend, we're going to be decisive. We're going to get you out of the market and hold USDC during those bearish periods.
And being able to avoid a down market allows you to benefit from the laws of compounding to the upside. It's all about trying to reshape the distribution to have compounding work more in your favor than against you.
Yeah, and it's certainly not tax advice, but you can hold this token for long-term capital gains, and you're going to avoid all of those taxable events of chopping back and forth between ETH and USDC, all the time. It's also going to simplify your taxes. From every jurisdiction is obviously different. No tax advice, but this is something that you can hold for the long term, and it's going to simplify your life in many different ways if you do so. So how do you buy it? You go to indexscoop.com/cdETI. You can mint and redeem this strategy 24/7, 365. It is on Ethereum mainnet, so connect your wallet to the IndexScoop app. You can see what the indicator is, what the cdETI is allocated in at any given time. Again, it's going to be either some split of ETH and USDC, and you can mint and redeem the strategy right there on Ethereum. Because the strategy is only ETH and USDC under the hood, the mint and redeem costs are a good bit cheaper than most of our other products, right? If you think about a diversified basket of DeFi tokens or metaverse tokens for DPI and MVI or other strategies we have, it's a little bit more gas intensive. There's more assets. But this one is just ETH and USDC, so it's pretty cheap to get in and out of. Obviously, it does depend on the current gas costs on Ethereum, which can fluctuate a good bit. But we're looking at pretty cheap transaction costs. So indexscoop.com/cdETI. Not available to U.S. persons, unfortunately. So that is one disclaimer, that you're not going to be able to access this strategy from the U.S. But everyone else, indexscoop.com/cdETI. That's where you can learn more about it. That's where you can mint it. This is what the page looks like when you get there. The buy or sell button is going to take you into kind of the app site where you actually connect your wallet and do stuff. But again, the marketing site's going to have the current allocation, links to CoinDesk's ETI page, and more. We've got a few questions to wrap up with here for Todd. Kind of our community submitted them to me. They want to get to know the man behind the the CoinDesk Ether trend indicator a little bit more. So let's I'll take off the blue background here, but do you believe markets are efficient?
Depends on what time horizon. But it's tricky because you can have a better view also about the future and where you think things are going. But if sentiment's against you, I think Keynes said markets can stay rational longer than you can stay solvent. So fundamentally, I don't believe markets are efficient, and I have a lot of my experiences is based on that premise. But do so go against markets at your own peril. So you also have to you have to survive as well.
Yeah. How about, do you believe crypto markets are efficient, or I guess, are they even less efficient?
They are more developing. So with that, I think they're less efficient. We still don't have the same degree of high frequency trading or algos as you would in normal markets. So less efficient.
Do you believe technical analysis is more effective in crypto?
Yes, I do believe that, and I think part of that is because we are going off of network. Well, in crypto broadly, depends of what type of token you're talking about. A blockchain, L1 protocol, are these governance tokens, DAO tokens? But I think with regard to native blockchain tokens, yes, I believe it is more effective because we're part of what we're investing in is we're investing in the network effects. We're investing in the utility based on the network of value created from these protocols, these blockchains. And with that, that is a growth asset. That's a complete growth asset. We're hoping that with more adoption, there'll be more utility as more will need this token to transact on the blockchain or to store value. So yes, with that, technical analysis does help because it does help to cut through the volatile price action to distill down trends and to identify when markets have been undersold or oversold to allocate effectively. Long-term trends, maybe not, but yes, I do believe that technical analysis does have a place in crypto.
Certainly seems like more market participants are using technical analysis, or at least broadly following the trend in crypto than for other assets. And good news for a momentum strategy is, a trade being crowded is not a bad thing. It's actually a good thing.
Yeah, no, that's right. I think another way of viewing technical analysis as well is you might have a fundamental view, and that's great, and that could be more accurate. But technical analysis is good because it keeps you honest. You might have a view. You place a trade based on your own view, and technical analysis can help to determine if the market's moving against you and maybe stop you out to then let you try that trade again. Maybe you're too early. And so technical analysis in of itself is also a good risk management tool to keep you honest about your convictions and to take away maybe even a small loss of a trade gone bad, as opposed to doubling down and have it go even worse against you.
Yeah, I think a lot of us here in crypto we certainly have a fundamental view, right? I'm spending my career building on-chain index products on Ethereum. Yeah. Sometimes I may even wear an Ethereum t-shirt around, but using a strategy like this can really keep me honest.
No, that's right. And it could be that, I think we're all, in some ways, we all could be at times too early into the space, or maybe just wait it out. And with that, seeing when the price is moving against you and keeping you honest and disciplined about that investment, it is useful to then maximize you being in it when the market's in your favor.
All right, Todd. Well, I just want to thank you for all of your work putting together the Ether trend indicator and helping us to build this cdETI product, and as well for joining us on this stream here today.
Thanks, Chris. It's a pleasure to be here. Pleasure talking to you, and thanks to all to the community as well.
Absolutely. All right. Capitalize on ETH's momentum with cdETI. Again, to learn more, go to indexgroup.com/cdETI. I'm going to roll the launch video one more time. If you're looking for more resources on cdETI, aside from just the website, we put out a Twitter thread today. All of the blogs and FAQ documents are linked underneath there, so go check it out. All right, that's all for our stream today. Thanks, Todd.
Thanks, Chris.
And let's run it one more time.